And you know, oh, there we go. I think we are. I think we are live now. Brilliant. And we should see this. And Abhishek, just check your YouTube stuff. You should see it there. And I think we're there.
Yeah.
Excellent. Brilliant, everybody. Welcome, and we'll get started. I have the deep pleasure of having Abhishek A Rastogi, who, like me, is very passionate about taxation. I never thought I would say that. But I think one of the amazing parts about doing this CII webinar series is just realizing how many amazing people who really thought through things are there in the world. And I have learned a lot. And I hope when in this conversation, everybody here who is joining us today will also learn a bit more than what they needed to be, particularly about GST, because it is a transformational system. We've lived with it for 3 years. I think very rare to find anybody who's in business in India who doesn't have an opinion about it. We've loved it. We've suffered through with it, all of that. And so, and you know, with the 3-year anniversary of this system coming on, I think it's very appropriate that we're able to think through some of these things. And we're going to go back and understand how it happened. What was the real changes in the industry ecosystem that caused us to really have GST? Do a rewind back in time to see how the current system came about, because there were many compromises made. And a lot of them had to be made at a political level to get this system out. And then, you know, one of the most amazing things that Abhishek has is he has almost 100 plus writs that he's presented in front of various high courts and the Supreme Court. So he's been an active participant in changing the GST system, both in terms of using our judicial system, but also informally in the background. And we're great to hear some of the changes that have happened behind the scenes and are applicable, but perhaps may not be in the public record. And the last bit, we're going to really watch, you know, maybe 15, 20 minutes at the end on how we see the GST system be reformed and transformed into really delivering on a lot of its core promises. We'd love to get audience questions. That's why we are here. I must pause and say, however, that this is not a time to get free GST consultations from Abhishek. We'll hold another webinar for that. But rather really your broad-based questions that you have. And as long as it's on topic, we'll happily try to address it. If you notice, you have a Q&A tab if you're joining us on Zoom. And you can click on that and you can ask us questions. You can also ask questions in LinkedIn. And I think hopefully that is being broadcast there, and we'll be able to answer them there. Fantastic, everybody. Abhishek, let's get started. You know, let's rewind time. What did India look like before GST? You know, why was industry clamoring? And, you know, I have this scene where, you know, I remember Rahul Gandhi or somebody coming up and said he was being stopped on the streets by a businessman asking, please get GST there. Why was this such an important move?
So, Aditya, you would appreciate, we are a diverse nation. When it comes to diversity, we are at our best, you know. When it comes to diversity, even in taxes, I think it was huge. Now, which meant that there was a lot of complexity to the entire tax structure. And you think not only from the perspective of the Indian taxpayers or the Indian businesses, but these foreign companies coming into India or investing into India, or who would want to set up businesses in India, they would, you know, have such a tough time to analyze different tax provisions of different states. And if it's a particular product, the product gets taxed at a different rate in different states. So if we talk about automobile, for example, there was clearly rate buying. So if BMW has to come into India, it will have to analyze that where the plant needs to be set up. What are the tax rates, the local rates, etc. Not only the VAT, but about the entry tax, and so on and so forth, in addition to the state incentives which were relevant in few states. So I think from that perspective, the entire system was very complex for anybody to understand. Now, so one is, of course, for the foreign players. Second, with respect to even the Indian MSME business, if they want to have operations, let's say in NCR, and you know, Delhi is surrounded by different states. If they have a unit in Gurgaon, the rate would differ as compared to Ghaziabad or Noida for that instance. So I think, you know, there was a lot of this complexity. You would feel that your rate for a particular product is X, but you know, that's not the reality. So, and rate is something which is very simple. I think the procedures, the timelines, and so on and so forth were completely different. So there was a need for a uniform system. And that's why industry wanted that to happen, so that even if they have multi-state presence, that is taken care of. So I think that was the essential reason. The complexity, rate buying, and so on and so forth. Those were the reasons with which, you know, the focus was there to have a uniform system. And, you know, one nation, one tax was even, you know, what even the government was saying. So from that perspective, I think it was very, very essential out there.
Yeah, but you know, I'll add to some of it. I mean, most of our audience here, you know, have experienced this themselves. But you know, there's this entire notion where you had, you know, every state had its own entry taxes, right? Which you're talking about now. Just imagine, which means that if you are going to send a cargo from Delhi to Mumbai, which is a very well-traveled route, each time you cross the border, you know, you have a truck which would wait there. It would pay the entry tax, and again, depending on what goods it was a different rate. And those changed because state governments decided at their own whims and fancies when those rates changed, and they would keep doing that. And you know, stuff like octroi, which made Mumbai and perhaps Maharashtra famous. I mean, these are 17th century inventions. The French Revolution happened because of octroi. It's literally from there. You know, people were so fed up with it, they took their leaders and they chopped their heads off, right? And so you know, taxes particularly which obstruct business, which don't allow smooth transactions, and honestly, at some point were unfair because they used to treat different states very, very differently, and a state could completely up and down its tax system to attract, and that set up in some ways a little bit of an unhealthy competition because they weren't, you know, competing on reform. They weren't competing on ease of on business. They were just competing on these tax rates, which then would change. And just to give you a perspective, also, this was something that frequently happened in the supply chain. You know, companies would wake up one morning and the excise tax, right, would suddenly go up, right? And because it would suddenly go up, that was because of their product, but that had no linkages to their industry, to what happened left or right or center, and then their entire industry became uncompetitive because they couldn't pass that on to the consumer. Or when excise went high, suddenly consumer prices would increase, and there was a disconnect. I think India, for a lot of people who are used to the Indian system, you know, the MRP, maximum retail price, is a very rare system around the world. Very few countries have a maximum retail price. And the reason the maximum retail price came in, one was because of a socialism hangover that our country had, that, you know, because of poor economics and poor central management, you had black marketing and hoarding and all of these. And so they needed an MRP to ensure consumers don't get fleeced. But the secret is they needed an MRP because they had to calculate excise. And that was the only way the government could understand how much they should tax a factory, because they knew what the maximum price was there. But this was terrible for a lot of industries. You know, particularly, for example, when e-commerce first started coming to India, one of the big reasons why e-commerce took so long to take off was because if you had an MRP, you would discount down. But the excise didn't change. Right, so because of that, even though big discounts were being given to consumers or large, you know, transactions were happening, the excise was on the old price, and so this price performance, figuring out what's to the consumer, what to you know, to a B2B transaction, was an absolute mess. Ajay, you know, how does GST work? I mean, GST is very unique in the sense only a couple of countries use the word GST. Most of them actually use VAT, which India had for a bit. But, you know, When we say GST, most other countries say VAT. Uh, let's just walk through what it actually is, because one of my very interesting conversations I always have with people is that it's very misunderstood. And most people still have that excise tax in their head. They don't understand the value chain. Would love if you could walk us through that.
So basically, let's just step back a couple of years back. And what were the taxes? So on manufacturing, there was excise, and the taxable event was the manufacture. For services, it was rendition of services. Taxable event was when the services are rendered. For VAT, it was the supply, and the taxable event was when that ownership changes, and so on and so forth. So what was essentially there is what is the taxable event, right? Now, not only it is the multiple taxes which were there in the system, but also different taxable events. GST has given uniformity to that. So today, what is the taxable event?
Abhishek, so pause here. I have a great question from the audience. By the way, this is Poonam Sharma asking, what are the taxes that GST replaces? Now, Poonamji, if Abhishek and I were to start making a list, that would be the entire webinar. But would love to at least some of the major taxes that got subsumed, and then we'd go forward as you were saying.
So basically, what got subsumed? Excise duty, service tax, VAT, entry tax, entertainment tax, luxury tax. So these are the major taxes which got subsumed. So predominantly what remained is stamp duty, customs duty. These are the taxes which, basically got carried forward from the erstwhile regime. So customs is today imposed the way it was imposed. Similarly, stamp duty is imposed today the way it was imposed. But most of the other indirect taxes have been subsumed in GST.
And by the way, I think we're going to come back to this in a half an hour or so. I am of the opinion that the future of it means that all these get subsumed into GST. But I'm a little progressive on this. But Abhishek, back to trying to define. So we had all these taxes that were subsumed. And then as you go through the supply chain, please.
So one is, all of these taxes got subsumed. A lot of uniformity came by, defining a lot of these terms, that when would the taxable event be? So today, whether it is goods or whether it is services, the taxable event is supply. So when the supply happens, there is tax on that supply. So from that perspective, there is a lot of this uniformity. Even from the rate perspective, if you see, and I mentioned about the rate buying, a lot of people used to buy cars in Uttarakhand and a lot of these other states where the rate on a particular thing was pretty less. But what GST has done has completely removed this rate buying, because CGST is a central levy or being levied by the federal government, and SGST portion is equivalent to the CGST portion. Now, if CGST in a particular state is X, CGST in all of these states would remain at the same rate, which means the equivalent other part of it, SGST, also remains at the same rate. So from that perspective, there is no rate buying. So if I live in Maharashtra, I would buy the car in Bombay only, rather than buying it in Chandigarh or Uttarakhand and so on and so forth. So from that perspective, there is no rate buying which is there under the GST regime.
So one thing which I'd like to clarify to everybody, and again, this is something that is, little bit hard to grasp, and but it's a 2-minute thing. GST is basically a tax on profits, right? And a lot of us say that, but that's income tax. Well, yes, that's a tax on profits as well. But essentially what GST did was to say that, look, you within your supply chain, right? Whatever value you've added to the product, you pay taxes only on that, right? So let's take a very, very simple supply chain. And I'm struggling to find something here, but let's say you're in the automotive business, as Abhishek has said. We all buy cars, everybody understands cars, right? And you as a car manufacturer are assembling the final car, right? You are buying all the various components from this car from different suppliers. They sell that to you. There is a GST rate that is paid when you buy it, right? And you take those components, put them together, and you make a car. There is a difference now between the cost of all those components put together and the cost of the car. The difference between all the cost of all those components that you bought and the cost and the price at which you sold the car, that is your value add. That is your profit. That is what you have done more. What GST does is it says we are only going to tax that much. And it does it by doing something very simple. It gives you input credit, right? So input credit is only that all the tax that was paid in everything that happened before that, right, goes up the system. So you are not paying tax on the components because those have been paid for when you bought it by the supplier. You only pay the tax that is the difference between the tax of the price at which you sold the car and then the price at which you brought the components. And between those two is your value add. That is the fundamentally interesting part of GST, because it removes you from arbitrary taxes like excise, which it doesn't matter what your cost was, what everything was, this is the tax, you pay it. We don't care what's happening downstream in the supply chain because not very responsive. And that's why companies kept having to lobby state governments to change the excise as their markets changed, as the ecosystems changed. And that's very important thing to understand, that it only taxes you on the value add. The second interesting thing, which Abhishek had mentioned, is this issue of entry tax, right? And if you remember, we looked at the example of sending a truck going from Delhi to Mumbai and all those borders. Now, the reason why states had entry taxes because there was rate buying, there was rate shopping. States were saying it's very unfair. You're selling it to my guys or you're transiting through me, but actually, your different state is giving you a tax holiday. It's not fair. I'm not getting it. And so they started all these things like entry taxes. And what it says was, no. We'll make sure that states get taxes at the time when it's due to them. And that's why please treat India as one market, just as there is no restriction on personal movement. There should be no restriction on the movement of goods and services throughout the territory. And this could only happen because states had to agree that, okay, we will do a unified system of these taxes. And most of them, which earlier, by the way, were state subjects. So the center couldn't even tell them what to do. And that's why it required the agreement of all the states to get here. Right? And that, I think, has been phenomenal. Abhishek, you were there when all of this happened. Was it easy getting all these states together to agree on this?
Certainly not. Believe me or not, there were a lot of discussions which happened at different levels. They happened. And the best thing about the GST Council was that it represented and included representation from all different states. So, and except once there has never been a voting. Most of these decisions were with consensus. But I think if we see the first draft discussion paper, even the model GST code and the formal manuscript which came, there were substantial changes. And I think the government also took into consideration a lot of these representations which came through different associations, through trade bodies, and from the businesses. So I think even till the time it got implemented, there were a lot of these suggestions which got incorporated in the system, which was very important. And believe me or not, Aditya, even from the time this GST has been implemented, the number of changes, the amendments to the statute, the rules, the circulars, and even the rate change for that matter is like tremendous. So I think from that perspective, it is changing every moment. Even as we speak, we can't rule out that there will be a couple of notifications or circulars to change or make some announcements. So I think that has been the constant way it has moved. And even if you see the GST Council meetings till March, I think we had some 39 meetings or so. So I think more than a month on an average, there was a meeting, every month. Even the GST Council has done virtual hearings, even in a situation when there was no COVID. So I think from that perspective, yes, there are a lot of these changes which have happened. It's a constant process by which, the law is getting amended. the rules are getting amended, the procedures are getting amended. And even if we talk about a few things such as what could be the threshold limit for small businesses, what should be the deadlines for filing returns, there have been extensions to these deadlines for doing compliances, basic threshold exemptions, and so on and so forth. So I think, it was very difficult for anyone to estimate at that point of time that what is relevant. So a beautiful classic example is your restaurant services. They were taxed initially at 18%. And then from 18, it did not go to 12. It went straight to 5% because, that was a populist supply. And suddenly you see 18% being charged on your invoice in a restaurant. You feel that, GST is not a good tax which has come. But the government realized that, did some, took some measures, possibly to tell people that, listen, this is a good tax, and hence reduced tax rate on certain important things such as this. That's the way it has happened. And the change is very constant. There are a lot of these changes in policies, in export procedures, in tax applicabilities, and of course, where representations have not worked or where the arbitrariness is in the system.
I'm going to pause you there because you said some very, very interesting things. And, we have some beautiful questions from the audience. And I'm sorry we can't take your raised hands in the system, but please use the Q&A tab as you've joined. We'd love to get in. We have quite a bit of questions. Now I have Mr. Tripathi, who's actually a great question. This is one of the big ones that I wanted to really cover in this. How did we go from one nation, one tax to one nation, 5 slabs, multiple this, exemptions now and then? What happened? I mean, that translation between one nation, one tax into something that was, I remember 3 slabs, then 4, then 5. Now there's a talk of even adding a 6th slab. They secretly put in 2 more slabs, which, for the diamond traders and all they did. Why did we go to so many slabs? What happened during those negotiations?
See, I think, again, coming back to the real problem, we are a diverse nation. So for a particular state, a particular product could have a lot of importance and relevance. They would want that to be taxed at a particular rate. And they would make a lot of these noises, I would say, in the GST Council meet, because that's the popular supply of a product for that particular state. So I think more importantly, to address the requirements and needs of different, people, and the then finance minister, when it was implemented, gave the speech in the parliament, and he said that, how can I tax Hawaii Chappal and BMW at the same rate?
So I have a great question on that, right? Hawaii Chappal and BMW, and this is something, by the way, and maybe it's just me. The same question I ask is that, why is a teacher taxed as the same way as a tobacco salesman? On that logic, right? Someone who is a tobacco salesman, their personal income tax should also be higher. If a company like ITC makes tobacco, or another company which is, providing education or is providing food, one, their corporate tax is different, but GST is different. Corporate tax is the same. Where is the logic?
Okay.
From a philosophical perspective, obviously from the political perspective, it's a great speech. Chappal or Mercedes, BMW, very populist, right? But then they should be consistent, right? I would have said that, okay, all BMW showroom in India should have a 40% income tax. And every halwai who is helping out their local kinara and providing food, they should have a corporate tax of 5%. Why is it okay to have a single tax for all companies, right? While having multiple tax, again, we're talking about a tax on profits, you're talking a tax on value add. Or was it just a pure political thing?
Let me answer that in two parts. I think just to complete my answer to the previous question, of course, we can't rule out rate rationalization. Now that we are 3 years into the system of GST, of course, this rate of 12% and 18% has to be rationalized. I'm not recommending or concluding in any way by saying 15% or 16%, or whether some items should go to 5% or that 5% should become 8%. But I think certainly on the cards is rate rationalization. That should happen. At least one rate should go off in these next 12 months or so. That should happen. Having said that, now, you have raised a very fundamental, beautiful question that has given this, you have given this example. Now, let's understand. GST is an indirect tax, right? It is a tax on transaction. It is a tax on consumption. So, for instance, if I am consuming today and the supply or the consumption is with respect to BMW, which means that my purchasing power is much more, right? And hence the logic is that I should be taxed at a relatively higher rate for luxuries.
But wasn't that all? Haven't you already paid a higher tax as an individual for your great income?
That we
Tax
know.
slab anyway, तो है. I mean,
From
you're
that
double
perspective,
taxing.
the rich are subjected today even to surcharges. So if my income is more than 5 crores, you forget the income tax slab rate, but there are certain surcharges to take me to a tax bracket of 42%.
So what you're fundamentally saying, right, is that it's a populist thing. कि भाई देखो, you are a rich person. We don't want people to spend money on BMWs because that's a luxury, and therefore we will make sure that we can take more money from this person, and therefore don't buy BMW. We want to encourage people to buy chappals. Because that's what you're saying, right? Because luxury taxes are higher. Same way why tobacco was charged high, alcohol was charged high.
So basically, it is simple that if you can afford a 70 lakh car, then you can afford to pay a higher amount of taxes on that.
But isn't that built into the cost of the car? Right? Because again, the entire concept of a value add tax, right? The entire concept was that you take a tax on profits.
Yeah.
Right? You take a tax on value add. The only time where that excess tax you're talking about is when it hits the consumer. Right? When the final bill, and I still remember a lot of people woke up in the morning one day and got their first restaurant bill after GST was implemented. And because all those tax, 5, 10 taxes were all rolled into one tax. And they suddenly realized, oh my God, how much tax I'm paying. Right? And so people were in shock that, look, how much tax I'm finally paying on the card, because it rolled up the entire tax to the supply chain and really informed the consumer. Right? But one would argue that that's anyway built into the price because it's a tax on profits. I could say that at end of the day, whether the guy pays 75 lakh for a BMW or 75 or 80, right? That amount of is a tax of profit on the BMW dealership. That person is going to buy it or not buy, but that price would go up or go down. So, it seems like a little bit of a magician's hand to try to say that. And by the way, most countries who have done VAT and GST, nobody has 5 slabs.
Yeah, no, I think that's a fundamental problem, actually. And one of the basic reasons to come into GST was to remove the problem of classification and taxability. Most of the disputes in the pre-GST regime were on classification and valuation, right? I will not comment on the valuation for the time being, but which in itself is a challenge today. But if you see classification, that problem still is there because we have multiple tax rates and brackets. So I think that's the problem. And another problem which remains, and I think Aditya, which is very relevant, is tax cascading. While the intention of the GST was that there'll be seamless flow of credit, the credit chain breaks in a lot of these situations. So I think that remains a problem in GST. And I think the government should seriously look into removing of these tax cascading effects.
If we were to move to one slab, what would that be for you?
18%.
Why 18? Why not 17?
Yeah. So basically, if you see the GST collections today, right? So basically 18% and exemption. I mean to say that.
Yeah, 0 and 18 as always. Yeah.
0 and 18, yeah. So basically, if you were to see the GST calculations or the collections today, it is more or less in the range of 100,000 lakhs per month. 1 lakh crore per month is the collection every month after giving the refunds, etc. Now, if we see 18% rate, then the government could basically move a lot of these products from 5%, which are essential commodities, to exemption, and impose 18% on everything, flat rate of 18%. So the collection would more or less be same. So without moving many products into different categories, you would basically now have only two rates, and that's more or less a revenue neutral rate. So there's a study which basically says that if you move everything from 18, from 28 to 18, 12 partially to 12 mostly to 18, 5 mostly to exemption, then, and if you impose 18% on those categories which are in 12, 18, and 28, it's revenue neutral situation. And I think it removes a lot of issues related to classification. And that's why I think 18 is a good rate.
So I'm going to then look at this from a company perspective, and we have a couple of questions on this. So I'm going to sort of connect the final dot. We started off this saying that, look, GST or VAT as it's known around the world, and we don't say VAT in India because we already had something called VAT and it wasn't the international VAT, it was the Indian version of VAT. So we'll stick to GST, is basically a tax on the value add in a supply chain, right?
Sure. Yeah.
Now, in India, the corporate tax for a MSME or larger company right now is about 21% to 25%, right? In your case, right, if we have an 18% there, and if we take the higher one, let's say 25% tax, and we add 18, of course, there are some surcharges and there's and dividend distribution and which a little bit adds up. So basically what we're saying, in effect, what India is promoting would be a 43% corporate tax.
See, I would not conclude like that, Aditya, for a reason. So for instance, if you take my services, I'm an advocate. I don't pay tax. Every tax is payable under reverse charge. But let's say I'm an accounting firm. Let's say I'm one of the big fours or a chartered accountancy firm. Most of my services would be B2B, right? So from that perspective, there is no tax cascading on the output supply on my end. But if you see Vodafone, right? If you see any of these telecom operators, there would be B2B also and there'll be B2C also.
Yeah, but you're saying the B2B moves to finally takes a C somewhere, right?
Right, but you know,
so the reverse cascading also works, right? Because the prices then go up. Because whether you say reverse charges, input tax, in effect, 18% is an additional cost, even if it's sent upward back down on the value chain.
So at least when it is B2B, there is no direct impact on the cost because it remains a pass-through. But when it becomes B2C, that's the real challenge.
Abhishek, just think about it, right? Just the way input credit goes upwards, it also comes back, right? Because it cascades your cost upwards and it cascades your ability to pay upwards. That same accounting firm, because someone has to buy the product at the end of the day, right? Someone has to pay the end GST. If you cascade it backwards, they could have charged 18% more. Yeah. It's also a lost opportunity.
But I think at the end of the day, I would not want government to scrap GST. We'll be out of business.
We'll come back to some of the reforms, right?
I think what's important is that the government must understand that what should be the contribution to the government exchequer, both from the direct tax and the indirect tax perspective. Now, in fact, the numbers suggest that after implementation of GST, it's not only the indirect tax collection, but even the direct tax collection which has gone up. Now, if the direct tax collection has gone up, can we think of a situation that indirect tax, which is on a transaction or on a particular supply, be reduced on all of these items? I mean, that remains a question.
No, I'll come to you in a more scarier question after that, but we'll save time for this. I want to go back to the 3-year implementation because we have some very good questions about this. One of the things the government had to do to convince states to come on board was to give them guarantees that we will give you X amount, right? And you had a wonderful paper on this, which I had read about, right? And there was a 14% revenue growth promised for 5 years. Almost a cess of 2.66 lakh crores has been sent out. And even just recently under COVID, almost 36,400 crores was given, right?
Yeah, a couple of days
Uh,
back.
why did they do this? And did states, for the most part, earn enough to cover it, or is the center still having to compensate many states? Because just for our audience, because the way GST works, right? You had a lot of states who were getting a lot of excise revenues because they had a lot of manufacturing there, right? And they were getting a large amount of there. And as Abhishek said, there were products that really were strong in that state where they had higher taxes on. And so there was a worry that as they sat in the Central GST Council and they had rationalization of rates um, uh, and on the universal items, they would suddenly lose state level revenues, and so the government underwrote the entire system, right? How did it end up? 3 years down the line, has the center overpaid, underpaid? Did states get more or less revenue?
So let me go again few years back from here. At the time of the implementation of the GST, it was very important that all of the states are on board. We never wanted a situation wherein, let's say, a particular state says that I want to be out of the entire GST system or network, because it creates a lot of problems for not only that state, but also the other states. So the intention was to get all of these states on board. And I think the finance minister that time did a fantastic job to get all of these states on board by addressing few important points. That one, GST is a consumption-based taxation system, right? So for instance, if the state of Bihar or UP would not want GST to be implemented, the government would explain them that the entire taxation system is based on consumption pattern. So wherever the consumption happens, that state will get at least 50% of the revenue, and also a share of 52% from the CGST portion. So which means effectively you get 50%, half of the revenue of the consumption, and also percentage of the CGST collection. So effectively you are getting 76%, half, 52 of 50 and 50%. So that was explained to them so that these consumption states came on board. But now what happened? There were states like Maharashtra. It said that, boss, listen, I am an exporting state. Why should I come on board with respect to GST? Then the government explained them that, hold on. Till today, you were taxing or were getting benefit only with respect to the goods. But tomorrow, Maharashtra, which is known for a lot of services as well, you would get benefit out of the GST from the services element also, because again, the same ratio with respect to the services would also come. So I think the government used that to tell the consumption states that your revenue would increase, and also told these exporting states that you would get benefit from the services. So don't worry about, your loss to the revenue. But still states wanted some sort of certainty. So what the government did, and I think rightfully did, to get all of these guys on board, gave a formula that we would keep a base year as 15-16, and we will give you an annualized growth of 14% on that. Based on your revenue of those years, we would estimate the revenue for next 14 years. In case the contribution of GST to your state exchequer is lesser than that amount, we would compensate you. And now you mentioned that figure is about some 2 lakh crores, which is basically my 2 months collection of GST. And in these almost, 36 months. So even if that compensation has been given to them, which I think has been cleared a week back till February of 2020, I think that amount is not much if you see in light of a problem, if some states would have opposed that and this reform would have not come.
So Abhishek, I want to be very careful when we talk about this, right? Was there a number guaranteed for these 5 years? This was a guaranteed number, right?
Guaranteed number.
Now, what happens in a situation like COVID when most of these GST revenues have gone? How does that guarantee work?
So the promise was certainly for 5 years. I don't know whether it gets extended beyond 5 years, because GST Council can make a recommendation. Article 279 capital A of the Indian Constitution provides for that. So at least this COVID period, is covered within that period of 5 years. So if the revenue drops, the federal government will have to compensate to the states.
Now, they have to compensate from GST collections or they have to compensate flat amount. Doesn't matter where they get the money from.
Wherever.
So essentially, we're saying is that now COVID comes, GST revenues have evaporated basically. And, for example, Delhi state has to almost declare bankruptcy now because 55% plus of its revenues are from GST. And most of...
We are seeing what has happened to alcohol rate and the cesses.
Absolutely. I think liquor taxes and all were something like 12 or 13%. And, they said, okay, quickly, let's try to bump that up. At least let's pay the salaries. And, I think it's an abject lesson for most states to now learn how dependent they are on GST and how much they need to have businesses that actually are, ecosystem centric and are not dependent on cycles. I think 3 years, that's been a big, big lesson to a lot of states that if they don't have a very diversified state economy, various crashes or issues or something, because Delhi focused on tourism, restaurants, retail, all of that, and it pushed out all manufacturing and services and all to it, saying that we don't want these people. But then their GST revenues collapsed because that was the industry that was most exposed during this pandemic and is going to take the most time to recover. But this means for at least 2 more years, unless it's extended, the center is going to have to make up that lost GST revenue to Delhi, no matter what. And the center has to then give bonds or, however much ways it raises money.
So basically, see what has happened. On an average, when we were collecting 100,000 crores, the collection in the peak months went down as low as 25,000, which has now come up to like 44,000 or something. So it is almost half. So I think with some lockdown opening, it could go to probably 60,000, 70,000. But you are right, economic activities would be reduced. And these figures are also impacted rightfully right now because of the reduction in imports. Now, even the imports are subjected to IGST, and that has also been reduced. So from that perspective, also the collections have gone down. So yes, there is a challenge, but because of the compensation cess formula, which has been imposed in July 17, the states from that perspective are at least in safer hands that their revenue is safeguarded and assured.
Now, we have a question, obviously. Should the government extend by 5 years? It's been 3 years in. One of the big things that states certainly would argue is that, look, COVID has dropped revenues like anything. The recovery road is going to be long. We're not expecting that within immediately 2 years, suddenly we're going to see an upswing in revenues, and that we are not going to be able to meet our expenses unless this 5-year thing happens. Should we extend by 5 years, or is this a great chance for the center to say, hey, you signed the deal? We are also suffering from COVID. One of the big things which I keep telling people is that everybody's asking for rebates and refunds on all sorts of services, and the first person who hasn't given any rebates or refunds has been the central government in taxation. So I don't think there is a mood there right now to really put more financial stress on the center's budget than already is. A, do you think they should do it? And B, will they do it?
I think the government will maintain a fair balance here. My estimation is that 2021 is not a great year as far as the tax collection is concerned. Both on the direct tax and the indirect tax side, there'll be a reduction or a dip, and a significant dip in tax collection. But what will happen is 21-22, the economy will bounce back to the growth trajectory. And believe me or not, we Indians are hardworking, there is no doubt. And I think also from the emotions perspective, and we will get a good, decent break of this 1 year or 6 months or whatever. Next year, we're going to bounce back. Infrastructure and certain other sectors will do really well in the next year, which means that 21-22, the economy will come back to its normal growth trajectory. Now, there are elections in 24, and this 5-year period ends in 22. And I think this government, they would want to keep states with them. They have done a good job so far for 6 years when it comes to these socio-economic issues and the hardships faced by different states in different circumstances. I think the federal government has stood by the state governments, and that's why today there is a lot of cohesive working between the state governments and the federal government. So I think knowing this government, they may extend that, but they may not extend that to 5 years. They may do that to 3 years so that they cross 2024. They give this benefit based on some formula. Maybe that formula gets a little reduced, maybe not 14% annualized growth rate, maybe a little reduced growth rate, but would extend that to 2025. And I think that will be a fair thing to do.
So I think so you're expecting, and the central government has said time again, and our honorable prime minister has been very pro devoluting powers to the states, and where he really sees most of the innovation happening in India, and with that thought, they will extend. Obviously, they might change a few things. They've learned a lot as well in the last 3 years. So I think that answers a bunch of different questions there. One of the interesting things that happened, and you were front line in this. In my case, I was on as a business person. I ended up being on the front line on this, where we had the first 3 months, 6 months, 1 year, 2 years. All of us subscribed to those GST updates because every day something changed, right? How to file online, offline, software, this, that.
You should have a good advocate on your.
Yeah, absolutely. Right? It slowed down. Obviously, now they are waiting for council meetings, and everybody holds their bated breath. It's not like every 2 weeks something new is happening. Yeah. But Mr. Jigar, who's asked a question, and it's a technical question, but so we won't give you a technical answer, but we'll try to expand it to
all technical answers are with a cost.
Absolutely. He's saying that there was a notification 43/2020 where they made a retrospective amendment, right, in section 140 of the CGST Act of 2017, adding the words which such time and that which closed loopholes, right? Yeah. Now, one of the things that the government sort of, and which in his learned opinion has cancelled a lot of the precedents that were set up by a lot of petitions, perhaps some of them even you worked on in the high courts and the Supreme Courts. Now, one of the beautiful things the central government in their first election innings promised that they would stop this time machine, where, if you don't like something, you don't like what the courts have done, time machine is on, I will go back in time and change it. And guess what? I win. Right. And, I've always argued that this is against natural justice, and it's against any good faith or trust or social or professional contract. You can't just go back in time and change if you made a mistake. Now, this has happened. Why did it happen? And was it worth it? And do you see more of these now? Once you use a time machine, very hard not to. Yeah. And you see more of these happening.
Yeah. So I'll explain this. So fortunately or unfortunately, this is the case of brand equity, which I argued before Delhi High Court. And this has become a landmark decision today, because the fundamental question which was raised before the court is that with respect to these credits, is this my vested right? And it becomes my property. And as per the constitution provisions, I can avail the benefit of that at any point of time. So for instance, if I have money in my bank account, right? And for some reason that bank account has been frozen for some reason or the other, will I be able to get the benefit of that money at some point of time, even if there is a process or procedure laid down for me to claim that money? Is an analogy which was raised in the court. Now, in this situation, what has happened is, without going too much into technical details, we got a favorable order from Delhi High Court. And this was a very, very fabulous, fantastic order from Delhi High Court, which is basically today the landmark decision of these 3 years of GST, right? And now what has happened is, in this decision, the court has said some of the fundamental things, that this is your vested right. You need not claim it within the period which is prescribed in law, which is 90 days. but you could claim it within an extended period of 3 years as per the Limitation Act. But what has happened thereafter is, after this decision of Delhi High Court, there is a retrospective amendment, which I think Jigar has pointed out. Now, what that retrospective amendment does to the entire problem is, it makes an amendment now with effect from 1st of July 2017.
Which is the time machine problem.
Same problem. But having said that, nothing to worry. The last important aspect of this decision was that the benefit flows not only to the petitioners in this case, but to everybody in the country who suffered from this problem. And the respondents, the Union of India, they were asked to publicize this decision. So, it had wider implications and consequences in terms of the entire problem, but a big thing for a lot of these businesses, especially the small and the medium-sized businesses. Now, what has happened is there is a retrospective amendment. Having said that, and as we conduct this webinar, there is an SLP file as recent as yesterday by the revenue against this order. But now what will happen is, technically, this retrospective amendment will also have to cross the constitutional validity barrier. And why I want to say that is, retrospective amendment in a very, very layman's term can happen only in rarest of rare cases. It cannot that, you one fine day after the court order, there is a retrospective amendment. And we have seen that in Vodafone case, and what global perspective came towards India after that retrospective amendment. So I think this retrospective amendment will have to cross that barrier in court. It can happen only in rarest of rare cases. In this specific case, it has happened after the decision of Delhi High Court, which again is a subject matter of judicial review. So from all of those perspectives, I think this will have to be tested in Supreme Court. But as we speak, Aditya, there is no stay on this order. There is no stay as we speak on this order. So all my friends who are listening to me, if they are into some sort of a problem like this, they can still avail the benefit of this decision till 30th of June, because as we speak, there is no stay.
I think that's also very interesting. We have a great question there. You've had more than 100 writs, right? Obviously, you're one of the leading lawyers in this space. I presume there are many other lawyers as well who might have fewer writs, but in amalgamation, that could work out to be quite a number. We have a question that, what has the impact in the last 3 years been of the judiciary in really solving GST issues when there's been either a failure at the council level to properly explain their spirit and thought, or a misinterpretation as it sort of went down the line?
Okay, so I must first tell you, Aditya, these 100 writs are for diverse sectors. All of these important issues which you could think or comprehend, or which are pending or have been addressed, all of these writs cover those all important issues. Having said that, I think we need to give full marks even to the GST Council and to the government, because 50% of these writs became frivolous at some stage or the other. So for instance, there was a writ petition which was filed. The GST Council also understood that there was a problem, and then they addressed that issue before the matter got concluded. So there are a lot of such writ petitions which were filed, which were argued, for which notices were issued to the GST Council and to Union of India, or to the state for that matter. They have acted proactively, addressed those issues, and some of these were like really fundamental issues. If I would explain that, you would basically say that it defeats the entire purpose. So I think a lot of these issues were addressed at relevant stages, at relevant time. We need to give credit even to the GST Council to address these issues, because it's not simple to address all of such issues. So I think half of these writs have become infructuous in the sense that the benefit has come by way of an appropriate amendment. So, and which is a very good thing to happen, because if half of these issues have been addressed, then it's a good thing for industry. In a lot of other things, a lot of these other issues, the courts have given favorable decisions in a lot of these things, and few of these are pending. So I think from that perspective, yes, I was fortunate enough to argue for diverse sectors on different issues, and You name the issue and I would have argued it. But today, I think GST Council has also played its role. The government has played its role really well and has it.
So, so I have a question there, right? So you said about 50 of those those petitions which were won ended up anyway becoming infructuous because the council and all looked at it and said, okay, you know what, maybe this is the right thing and we should modify it. Now, this is not a symptom of GST; it's a symptom of India. But we've had now and the central government has said this time and again. So I'm actually repeating what very learned finance ministers and learned prime ministers have said is one of the major issues facing our country, is essentially that you have a law that gets set up, you have multiple amendments that happened, everybody sues it, and obviously you have writ petitions and case law and all that thing. India is a jurisdiction where precedent matters, and for those who are not lawyers or are following this, it means that if the Supreme Court or a High Court gives a judgment, everyone down the line can sort of lean on that and say, look, this is now already a precedent, therefore add to that jurisprudence, add to that judgment, you cannot go back to square one. And the Supreme Court, of course, is the final arbitrating authority on this. A Supreme Court judgment is precedent plus, right? High courts can be appealed upwards, and multiple high courts, if they give differing judgments, which happens all the time, that goes up to the Supreme Court and you get a precedent. There is a huge lag, and the lag could be even a decade or more between where you have a ironclad precedent done by the Supreme Court on a tax matter, and it never gets codified into law. They never amend that law. And then you have a huge number of litigation cases, which end up being tax officers or authorities at various levels interpreting the law as if the Supreme Court judgment never happened. And then they all get sued, they all go into appeal, they all then finally go, and then all high courts are sitting and batting saying, this is already decided, this is decided, why are you bringing it up again? Right? And although the government has done some brilliant reforms saying that you can't appeal something that is a precedent, why aren't they just saying, okay, guys, if something is decided by the Supreme Court, either use your time machine, which you don't want them to use, and which they have, and they might do, or codify it into law and send a message down to all your tax officers and officials that, hey, this is now the new law. Supreme Court, highest authority in the land in maintaining laws, if not creating them. What's the problem? Where's the delay? Why isn't just that happening immediately?
I think the problem is with the mindset. A lot of these times, some of these officers are so pro-revenue that they would not want to look into that decision of Supreme Court. But I think part of it is to be blamed to the businesses also. If that situation happens, then they should not succumb to pressure. And I think if the first adjudicating authority, who is the quasi-judicial authority, is, or for that matter, any authority, is not following the decision of the Supreme Court, which is law of the land, I think very clearly there is a case of judicial indiscipline. And right then and there should be a writ petition which should be filed against such an action of that officer, so that it is highlighted that it's a case of judicial indiscipline and this entire litigation should not happen. In fact, it has happened in some of my cases where I filed petitions after these orders at the initial level to straight go to the High Court without following any other alternate remedy to prove judicial indiscipline. And strictures have been passed against senior officers, including commissioners in few cases. So, courts have sometimes looked these issues very, very strict eye.
But Abhishek, so one of the things that GST did, and I know the central government is also now committed to rolling some of those back, because this was a very big hardship on businesses. They criminalized everything. We used to talk. I remember Honorable Arun Jaitley, and that time, of course, Arun Shourie on television 6 years ago. One of the big planks what they said was, we are against tax terrorism, against tax terrorism, against tax terrorism. And that was one of the biggest things that they said, we promise businesses, India will not be a land of tax terrorism. But when the GST was passed 3 years ago, when a lot of the tax amendments came in, and by the way, for everybody listening, in this, one of the features of the budget, one of the features of the COVID relief package is to roll back some of these issues, which is very nice of the government. But, I've never seen these, by the way. No other country does it. These are all, so I did a entire research on the history of taxation of the world. All of these techniques, by the way, the last people who did it was, Vlad the whatever betrayer or whatever, 14th century, 12th century, Russian Empire. Because, no one else does this, where if you don't pay GST, you're in jail. If you have to appeal, you have to put 30%, 40% down, even if it's completely against you. If you do anything, you're in jail. If you appeal to the department. Even the common law, which we said we are based on the UK system, the appellate courts have nothing to do with have completely different people, different jurisdictions than we have. How is a businessman supposed to, withstand this pressure if he can go to jail?
So I think the answer there is, there is no answer to it. But what has basically happened? Let's just analyze what has happened. Today, we have GST network system, which has basically given a lot of data to the government. So for instance, this circular trading or bogus invoices, this has been a lot talked and debated about. So what is circular trading? A sales to B, B sales to C, C sales to D, and D sells it back to A, right? So the goods move in a circle. There's a margin of 0.01% or something. And the government feels that all of these are bogus trading, etc., and so on and so forth, right? And believe me or not, I was talking to someone and that person told me that Tihar jail has a complete separate cell, I think jail number 6 or something, for GST, evasion people. And at one point of time, I think there were about 600 people in Tihar jail. Only in Tihar jail, 600 people due to GST evasion. And in separate other jails also, I think Mumbai, etc., and all of these places, Arthur Road jail and all those places, there was a huge number of people there. So what has happened? System has given this data to the government, right? Which is a good thing to happen because system has provided that information. The second sort of issue is that in this sort of a circular trading, if I would tell it to any layman, a person would say that why this circular trading is happening, right? This circular trading could happen in few cases where people want to jack up their turnover for bank loans and so on and so forth, right? But the moot point is for someone to be imprisoned. The real question is that whether there has been a case of GST evasion. If A sells to B, B sells to C, C sells to D, and D sells it back to A, has there been any leakage of GST or not? Now, without going into those details, whether there is a tax payment or not, for these circular trading issues, a lot of people have been sent to jail. That is one. Similarly, on the bogus invoices.
Well, Abhishek, I would argue with anybody in the audience that if you're doing fraud, you're doing bogus, you're doing anything, they should be under the Fraud Act. They should be under the Bogus Act.
So
we have enough very strong
GST provision, but some money laundering or something, or forgery or banking provisions or something.
Itne criminal laws we have
exactly
which cover fraud, bogus, that. Penal codes being made immortalized by Bollywood films also. Those people should be charged under that. Why do we need a separate criminal GST? And for example, so I'll ask you a question. If a small trader or a businessman doesn't pay GST for whatever reason, he had a death in the family, his CA absconded, all sorts of reasons happen in real life, right? Yeah. In a normal court case, right, you have to first go to a magistrate, right? You have to prove the charges. You have to register FIR. Then you go to jail. What happens in a GST case?
So in a GST case, it's very simple. First, they see the monetary amount, right? If the amount is more than crores evasion, then there is a high chance that you would be actually.
Who sees?
Commissioner sees. And
so this is
completely upon him to assess that at that point of time. Because
so he decides that
to believe.
And so he decides this person has to go to jail, right?
He decides, yeah.
Does he have to consult a judge or a magistrate or things like that?
He's equivalent. He has all the powers to issue summons and notices, etc., or a warrant, and would produce this person before a magistrate court in 24 hours of arrest.
Right. But
Commissioner has that power.
Right. So they have a unilateral power. They don't have to prove it. They don't have to do it. And for what is basically a civil offense, they haven't murdered somebody.
Yeah.
They haven't. And if they've done forgery, they should file an FIR and book them under criminal offense.
Yeah.
Right. So, but why? I mean, where's the trust?
I think you are right, Aditya, to a very large extent. And I think this harsh punishment for tax evasion is not the correct thing. And that should happen only after complete scrutiny. And also, if you see when a person is taken in the judicial custody, what is the reason? The reason is that he would not tamper with the evidence. He would not, influence the witnesses and so on and so forth. Now, if you're taking a person in judicial custody for 14 days, generally these people are kept there for 60 days in jail. And they're kept in jail for 60 days after all the documents have been seized, after all information is available in GST network.
First, you will do a survey or a raid, you have the GST, and what more are you waiting for?
So what are you achieving by sending that person in jail? Because ideally, this jail and bail, the entire game is that this person should not remove the evidence, should not influence the witnesses, which in any case will not serve the purpose by sending them to jail.
I think so. We have a lot of questions on this, and we have about, I think, 20, 25 minutes. So I'd love to sort of walk through and get, where do you see this going? I mean, we've had COVID-19, which has really put stress on GST, and we've talked briefly about, the loss of economic activity. I think our Prime Minister has gone all out, really wanting to do Make in India, and our global tax collection mechanism. Our rank has gone something from the high 130s to something like 73, 78.
60s. Yeah,
60s almost, right?
Ease of doing business, yeah.
Right, but ease of doing business at even 60s and 70s out of a country list of 135. We are still a 50% student, 60% student, right? And I think a lot of foreign businesses and FDI and even local businesses have been asking that post COVID-19, if we want to invest our money, because a lot of them have lost their businesses or they've put a massive pause, they've had to rethink, everything else. If they want to invest in India, one of the big attractions which we had said was GST. Right, that we are one nation, one tax. There's freedom of movements, goods. You manufacture anything in one part of India, you can take it anywhere. If you invest in services, free flow of goods and services. Right. Obviously, there are issues. We've discussed some of them: multiple rates, syntax criminalization of GST. We haven't even talked about the problem that which is unique to India again, is that if the guy before you hasn't paid GST, you don't get it. So suddenly they've turned you into a police officer. You make sure that every vendor and supplier is paying GST. Good for the government. They've outsourced the government work to private, which is a theme in the country for many years. But even if you take that into perspective, if we want to move that position, the ease of paying taxes rank, ease of doing business rank, from a GST perspective, our finance minister comes on a channel, and what's the most beautiful speech she could give that we are going to do this in GST that will truly attract investment in the country?
So I think there are a couple of points there which are today creating a big sort of problem for industry, especially for MSME sector, and that has to be looked into. For instance, today, if you see the entire concept of payment of tax, suppose I am a service provider or I am a supplier of goods. The moment that supply happens, I have to raise an invoice within the stipulated time. The moment I raise an invoice, I will have to pay in the next month the GST on that invoice. I may not receive the payment for 4 months, right? And I may not receive the payment at all. So there could be two situations. One, where I am receiving the payments, let's say after 4 or 5 months. So I am out of pocket with respect to that tax, which I need to pay in month 1 as compared to the collection of the supply, which happens in month 5. That is one.
So essentially, for our audience, what Abhishek is saying is that you have to pay the government even if you don't get paid. Exactly. And that is, and especially under a COVID-19 time, that's a horrible situation where payments are not coming. Government is saying we are not going to, we haven't rebated or relaxed or said anything. You still have to pay the GST, even if you're not getting the money.
Right. And second situation, so first situation is late payment. Second situation is that you don't get paid at all. There is a bad debt. So in a situation wherein I am not getting money even for the supply which I have made, I'm required to pay tax on that supply which I've made. So imagine a supplier of either goods or services who has not received even a single penny from the recipient. He is required to pay tax because the invoice has been raised and he needs to discharge tax at the time of raising of that invoice. So doesn't make sense at all. So
Nobody has this around the world, unique to India.
it is, of course, unique to India because a lot of these countries where GST or the popularly known as VAT system has been implemented, there are formulas given to reverse that amount in a very scientific way.
In a very quick way. You're
In
not
a very
waiting
quick
for the
and scientific way. And that benefit comes back by way of, either increased credits and so on and so forth to the businesses. But I think this is a real problem. So, and there are a couple of such issues, which are very, very relevant, to industry today. If we talk about accumulated credits, if I have a lot of credits in my system and I'm not able to utilize that credit remains in my credit ledger account. And what happens in that situation is that, there is a straight case of tax cascading. So if you want to give refund in other cases, please give refund in this situation as well, because
it makes only natural sense.
Yeah.
The case of natural and business justice.
So a couple of these issues, I think, have not gone to the courts. But for instance, there was an issue, very interesting, which came in the initial days of GST, is when a registered business procures from somebody who's not registered. So for instance, if I am a big company and I'm registered, but I buy something from someone who's not registered under GST, the liability to pay tax in such a situation is on a person who's registered. It's reverse charge. So I challenged that. I said that, one, it will demotivate me to buy from small players who are not registered. Secondly, the entire rationale of giving a threshold to those people is that they are small businesses. They don't have to get themselves registered. So entire objective goes for a toss. So there was a writ petition in Delhi High Court. But fortunately, the government also realized the problem, and that amendment came by way of, appropriate changes in law. So which was a big blessing for industry.
What else would you change? So let me be provocative here, right? If you are a business in India, and you have operations across all states, and you have a lot of distribution, businesses which do have offices and this, and the earlier days where you were a huge business, right? When you had to have a pan-India operation is gone. Even if you're an e-commerce startup, you have to have something, a warehouse here, an office there, etc. Right? Now that means 28 states. Each state, 3 GST numbers for each state, right? Something like that. So that's 28 into 3. So that's 84 GST numbers for one business, right? Plus maybe 4 filings, maybe 8, depending on how big of a business you are. Let's say you're a smaller side, 4 filings a year, 336 GST filings. Does that seem reasonable? Does that seem like a good and simple tax?
So yes, I think, of course, there is a challenge on the compliances, and and that challenge has increased significantly for the service providers. So imagine a bank. In the pre-GST regime, bank would have only one registration of service tax, centrally registered. So for instance, if there is a big bank who would have like 10,000 branches, that entire bank would consolidate the entire revenue, let's say in Mumbai, and there is only one service tax return which is required to be filed. Everything gets aggregated and paid from there, right? But yes, under the GST regime, for the service providers, it's a big problem because they will have to register in each and every state.
3 numbers per state, right?
Yeah.
336 returns, and if you're filing monthly,
Yeah.
that's 1,000 plus returns. Now, one of the things which in other countries, right? Let's look at Germany or somewhere which are also state republics. There's no point looking at Singapore, which is a small country, right? But they are larger countries with huge economies, multiple states. They have a central GST number. They have a something like our central organization, the GSTN, the GSTN central organization, which has on the board all the states, right? They issue one number. You say, look, I bought from here, I sold from here. This is the one tax. Okay, in India, 5 tax sub slabs. You pay there, right? And then the system sort of says, based on who you bought and who you sold, assigns where the tax goes, right? Uh, in 2020, when you have the entire system online, when you have everybody uploading returns online, why can't they just upload all their invoices into that same number? And why should I as a business have to do the government's work in figuring out who, which state, what tax, what IGST, CGST? I should be able to take all my invoices, push it against a central number, ideally my PAN card. Why should you even have a GST number separately? Send it to the GST organization, pay it into their bank account, then they can sort it out.
Allocated based on consumption.
Allocated based on the same rules right now, because again, it's where you bought it, where was it supplied, and those rules, they publish those rules. They can run the algorithm themselves, and I give the address bought, give the address sold. Up there, you figure it out. What's stopping us from one number, one country, one number?
I think also, to be frank enough, a lot of states have also reservation to the system. They don't want to get into a situation where they are just being paid based on a particular formula. They want that power also to be with them. Now, what happens is that in the current situation also, the GST authorities, they would do different audits. So the state team would do audits in a particular threshold or a turnover and so on and so forth. So these powers are also
why can't they do it anyway? You have your number. You can say, look,
basically states don't want just the revenue from the federal government. They want to be in a participative mode, to put it more.
Abhi, where is the paisa going? It is still going to the GST-IN. It's not that you are sending it to the state government's bank account.
Yeah.
You're anyway sending to the GST-IN. So you're sending the money to them anyway. It's not like it's first going to the state, then the state is sorting it.
Yeah.
Right.
Yeah.
You're sending the money to a central account, right? The states are board members of that. We have a Supreme Court. It's not like we're a European Union where every country is different. States are also part of India.
Yeah. Yeah.
And tomorrow, if a local IRS officer wants to raid you to ensure that you're compliant, he has your address. He has the data. In fact, he has a lot more data thanks to that system than if if it was just his local GST number.
The entire structure is based on consumption. And there are different, of course, if there is a central tax, central GST, there is also a state GST of that particular state where the consumption happens. The entire compliance becomes cumbersome because depending on where the supply is, whether it is interstate or intrastate, and if it is
again, all of that is what, right? Where I bought, where I sold, I upload it.
Yeah.
You and I could sit for 1 hour and make a software that does this, right? Literally, because
and they can actually, based on the total collection, keeping the base figure of 1920, allocate that money in that proportion.
No, I'm not even saying allocate. I'm saying, you know where you bought it from, you know where you sold, you have to upload the invoice, right? Rules are very clear. Place of supply, you declare place of supply, you declare place of receipt, right? The same calculations we as a company are running, they can run it on their own. You don't need a separate number for this.
There'll be no complexity after that. Now, what will chartered accountants?
There is plenty of CAs to do in India right now. बहुत काम है. Every single international wire transfer you need a CA certificate. So don't worry. There are enough built-in employment schemes for CAs that the Indian government takes out every day. So please don't worry, those CAs who are joining or those who are thinking of becoming CAs. A lot of employment schemes by the government to make sure that you are fully relevant and you're always needed. But all these things are there, and obviously there is a political will that requires, and it's not easy to corral all the state to make these things. And I can completely understand that if I'm a state, I would be very worried that the center would trample upon my rights. Obviously, safeguards have to be put into place. All of this has to be really done. So I'm fully cognizant of all those issues that state has, and we joke around because it's really, really cumbersome. I mean, 1,024 returns or something is not ease of doing business, and definitely it's not ease of doing taxation. But what else could they change? I mean, we've looked at a single rate. We've looked at one tax, one number, one country, right? I mean, that's the ideal, right? But there's a lot of other small things that that GST has come out with, and I'll give you an example, right? The big question everybody asks, day one question when you talk about GST, out of sheer concern of state revenues, they left off the most essential items: liquor, petrol, electricity, right? And the idea was that, okay, those are very, very sensitive subjects for the states because they really have control, and that's where their revenue comes from. From a lot of big states, those are the biggest revenues. It is no coincidence that the first thing Delhi did was open all the liquor stores and put 70% tax. They could not have done that if liquor was under GST, because they'd have to go to the GST council and ask them that, okay, can we please have a cess on liquor? Do you think post-COVID, and everybody, by the way, also increased the excise rates on petrol and diesel, worldwide, negative crude, and India increases the price of petrol and diesel to make up for lost revenues.
Yeah.
Will they now ever bring it under GST, or thanks to COVID-19, that's now a completely lost cause?
So let's look what is out of GST and what is the state. So for all my friends who love liquor and alcohol, they don't have to worry, maybe at least from the GST perspective, but they may worry from the state levies perspective, because constitutionally, alcohol is out of the GST purview. So for alcohol to come within the GST purview, there is a requirement to amend the constitution. Right, so alcohol will continue to be out of the GST purview,
regardless of what we do, because constitutional amendments are very, very hard,
very difficult, right? And states will have reservations against those amendments. So I think alcohol will continue like that. Coming on to the petroleum, the GST Council is to make a recommendation with respect to the implementation of GST on these 5 petroleum products, which has not happened. And I don't see any reason that after 3 years of GST, petroleum is not included within this GST purview. I think it is high time now that the GST Council decides petroleum to be included within the GST purview. There is a lot of tax cascading because of this exclusion of petroleum products from the GST purview. So I think it is high time. The other last product which is having an impact is the tobacco and tobacco items, which apart from the GST has central excise duty on that tobacco. So that may continue for a while because this is seen as a demerit good or a sin good, as it is popularly known as.
Back to my point, right? Tobacco salesmen's income tax should be higher, but please go ahead.
So I think this is the status of different products, but coming back to the petroleum and these petroleum products, motor spirit, high speed diesel, ATF, and so on and so forth, these I think should be included, and the recommendation should be to include these within the GST purview very soon.
So we have a few more minutes, and so I'd love to do a rapid fire question round, quickly sort of go in to see the state of what's happening right now. E-invoicing system, right, which just goes back to what I just said about why not just have one number, and anyway you're doing e-invoicing, what's there? Good, bad, will it be effective? And particularly once you go down to SME.
It will be good and effective, but I think in the beginning it should be kept as optional to small businesses,
because it's going to be hard to get the entire systems.
Let them come back to, with respect to technology challenges, but make it mandatory for the big ones.
So for a participant, what e-invoicing basically does is that every time you issue an invoice, you actually immediately put it into the system, right? So there's absolute clarity. And the system knows exactly And this stops a lot of issues, fake invoices, fake bills, fake all of this. So there is an absolute clean tracking of what invoice was given to whom. And a lot of issues, again, unique to India because they did the input credit matching system there. Those are removed because instantaneously the invoices are registered, particularly for a lot of fraud. And this is even within the industry that happens, where you have people who are trying to embezzle money by putting in fake invoices to the company and taking out money in their personal names and their friends and family names. That also stops because now the invoice is in the GST system. So theoretically, you would be able to then even properly check whether it was a real invoice issued and all. So long term, this is something which will really, really, really improve India's transaction systems. In the short term, there's going to be a lot of pain as companies sort of gravitate to now saying that, look, anytime you bill somebody, you have to inform the government. And if it's implemented wrongly, you know where all the issues, those issues are going to come on that. Next question, G. At what point do you think that that this single rate or two rates or three rates will actually happen? Do you have a mental timeline on that? 1 year, 2 year, 5 years, or as the Chinese president say, we will leave it to more wiser generations?
See, Aditya, I'm not the right person to comment that when it will happen. But I think if you were to ask me when it should happen immediately.
So there is no reason why it's not happening. It's just a issue that they just need to sit down and they get to solve. Third question: United States has zero service tax. Right, largest economy in the world, largest services economy in the world, built because of zero service tax. And if you ask them why do they have a zero service tax, it's very simple, right? If you are, let's say, an accountant who is servicing your consumers, right? 18% tax is it's an excess tax on labor. You're already paying income tax, plus now you're paying an additional 18% tax if you're facing consumers. And in the philosophical stance of the US, that is double taxation, right? Yeah. Of course, B2B, then you and I can argue about, this beautiful input credit that goes up and comes back and pricing and all, but that's a pretty clear example. Why has the Indian government still maintained that services which are B2B, that is one thing, but services that are B2C, where the consumer is going to pay that additional 18%, and either it hits the consumer's pocket or it hits the providers because he has to bring down his price correspondingly because the consumer is only willing to pay X. If he's going to charge 5,000 rupees, it's going to be 5,000 rupees with or without GST. A consumer couldn't care, right? Because he's not getting the input credit. Why has the Indian government persisted on still charging a very high service tax, which is effectively double taxing poor SMEs, individuals who are not working with businesses but are working with consumers?
See, I think the rationale is that they are following the principle of broaden the tax base but moderate the tax rate. But the problem is that moderation of the tax rate may or may not have happened. So I think they will continue with that perspective to broaden the tax base. So they may not take out services from the gamut of the consumption tax system, but moderate the tax rate is certainly on cards with respect to essential services. So that's why if you see today also, education services, health services, and few of these important services.
Would you say that with all that is going on in the country, isn't accountancy and chartered accountants becoming essential service? Can't do anything without them anymore.
Lawyers, even the advocate services.
But आपको तो reverse charge हो गया ना.
See, the Constitution of India provides the right for legal aid. Now, if Constitution provides that as a right,
our last few finance ministers have all been lawyers before Sitharaman. So I understand the special, place in the heart of all our FMs for lawyers. But one could argue a lot of services are essential. As you rightly said, right to legal aid. Today you can't move. You have to pay taxes. You have to have everything else. You have to rely on a CA. And in fact, there are a lot of things the government say only a CA can do. An individual can't, unlike other countries where an individual can say, I understand what I'm doing. I don't need a CA. You can waive right of CA. In India, you cannot waive right of CA. There is no such thing. Your CA has to file on your behalf. It has to appear on your behalf. You can't go and appear in half the things without you. Isn't that an essential service?
So I think you have a point, and I would give you an example of a writ petition which I am arguing currently in Delhi High Court, and this is with respect to the publishers. Now, a lot of these books are exempt, so which means that there is no output tax on the books. But if you see the cost for these publishers, there is paper which is taxed at 18%, ink is taxed at 12%, royalties paid to authors is taxed at 18%, and printing, etc., everything is taxed. And everything becomes part of their procurement cost. There is no tax on the output side, which means what? This entire cost on the inputs become a cost to them.
So are you arguing for more tax, or are you arguing that the import tax should be, refunded?
Refunded. So I am
I
arguing
was
that
just wondering. I was like,
I am arguing that if you really want to give benefit of exemption to books, then you please give benefit of refund, which you have given for inverted duty structure for a lot of other things. So for example, life-saving drugs. If these are taxed at 5% and the input cost to that pharmaceutical companies, let's say 10%, it uses the credit, whatever it has, and the balance becomes refundable to it or comes back, by way of refund. Whereas in this case of publishers, the output is exempt. And why you have kept that as exempt is because you want to keep books as cheap as possible and would want to give that because the fundamental, there are provisions, directive state policies, etc. And even the constitution provides right to education and so on and so forth, right? So what I'm arguing is, and this has basically nothing to do with the GST structure, but fundamentally raises the point that if the intention is to provide an exemption on something, and today you have a structure or a provision for inverted duty structure, and you are giving refund for all of those situations wherein the tax rate is low as 5% and there is a high input tax credit. Now the entire purpose of giving an exemption goes off for a toss. You tax me at 5%, I'll be better off. So I think those are those fundamental questions which need to look into, that, on one side, you want to have certain objectives, but on the other side, you are not following that in certain cases. So for instance, also the related point is that the fundamental objective of GST would be that there will be seamless flow of credit, which means anything which comes as a procurement cost to me, the amount of tax which I pay onto that is being used by me to offset my output tax liability. But there are a lot of instances which I am challenging in courts. When I construct some property, a lot of these services which get used to construct that property, when the goods get destructed. So for instance, in this COVID-like situation, if I'm a retailer or a wholesaler or even have stock in my factory, a lot of these goods may be destroyed. For example, footwear, bags, and so on and so forth, which will never be sold. And there is a specific provision in the Act which requires me now to reverse that credit, which has gone into that, which is again, breaking that chain. So a lot of these tax cascading issues have come up by way of these block credits. And I think in the beginning, we were talking about the automobile sector. Now, if I take a car for my business purpose and I use that car either for my managing director or for my business purposes and so on and so forth, and I am not into renting of vehicle or rent-a-cab services, then on those motor vehicles also there is a restriction of availing the credit. I can't avail the credit. But at the end of the day, it is used for business. There are specific provisions which provide that whether these goods are used or intended to be used in the course or furtherance of business. If that's the fundamental provision of law, then why should there be a provision with respect to such restrictions? And a lot of restrictions are there.
So what's this? It's almost sounding like you agree with some of the comments and questions that we've got, that the actual way to reform the GST system is through the courts, because we can't wait around for the council to really come in and step up. Obviously, we are all heard about the time machine, and I look forward to seeing what happens to this case that you're fighting when it goes to the Supreme Court on whether the court will rule that was this a rarest of the rare instances where you really needed to use that time machine, or now you have made it completely legitimate to use the time machine every time you lose. Will be at a high court level, forget about losing at a Supreme Court level, right? So I think that will be a very interesting thing to see. do you see, we have a lot of PILs, right? Every day people are doing PILs for all sorts of good and bad reasons. I'm not going to get into why people do PILs. Do you think there is room right now, perhaps with you leading it and many of our viewers sponsoring it, to start just putting a whole bunch of PILs for reforming GST?
See, I think
You've done 100, let's throw another 100 into the Supreme Court, because all of this stuff logically makes I think good arguments can be made. And I think the Supreme Court would agree on it.
See, basically, if you see most of these issues which are there, which are relevant for GST, public interest litigation could be filed only for those cases where public at large has been impacted. Now, as compared to these writ petitions, which are filed in jurisdictional high court under Article 226, because basically what you're doing is you're challenging the vagaries of the provision. I don't want to be very technical, but basically what you're saying is that this provision of law is absurd. And you are challenging that law in respect to the entire GST framework, keeping a constitution in mind. So I think writ court becomes a more relevant court rather than a PIL, because PIL, so for instance, there was an issue a couple of years back with respect to taxability of sanitary pads. With respect to that issue, now it has nothing to do with the provisions of GST, but impacts the society at large.
That's a public interest, a very large.
You could file a public interest litigation, and I helped one of my friend,
How many people need to be impacted before you see it becomes a public interest?
It need not be a certain specific percentage of people, but the benefit has to be at large for general people.
For example, hypothetically, if somebody would like to sue a PIL to have one GST number, not saying I will, please, dear central government, I'm not going to sue anybody. I leave that to the professionals like Abhishek and other people who may want to take up this cause. Would something like suing the government saying, look, every single SME, MSME, business owner, everybody registered, unregistered is impacted by this.
Go ahead. Yeah.
This is something there. So I think on the broad basis, there is room. Why aren't people doing it?
See, actually, you need self-motivated people to file PIL, right? Unless and until there is some sort of funding or backing, etc. Because who would spend time on that? Most of these PILs, if you see, frankly speaking, are for a cause. Either they are general for a specific cause, or backed up by a certain group of people or associations who would want to, look into broader aspects of society, or NGOs and so on and so forth. So I think when it comes to the fiscal problems or the fiscal laws, there are lesser people who would be inclined to file PIL, but would rather go into the specific problems and try to create a cause of action with respect to that provision or problem, and go for a writ court. But having said that, of course, I gave that example of taxability of sanitary pads. If there is an issue such as that which impacts larger society or a large percentage of the society, especially the underprivileged, then of course there is a reason for you to file a PIL. And another aspect also is with respect to the underprivileged. So when you're filing that PIL, I would not use the word underprivileged. For example, there could be a PIL even on the issue that if there is an earthquake which comes in a particular area, how well equipped is the state to handle such a situation?
Absolutely, and because it's a huge impact.
But it would impact people at large. So I think the impact has to be on people at large, which comes. But when it comes to these GST issues and all, that aspect will have to be looked into. But I don't want to rule out that PIL cannot be filed.
Thank you. I'm going to try to wrap up with that. I think we've gone on a little bit longer than than was scheduled. We still have so many questions, and we try to rapid fire through some of them. And my apologies for that. In the chat, I have shared the link to our CII groups for which and I'll repost them right now. These are a link to all the other CII webinars, previous and upcoming. We will have a recording of this. This will be posted as well in case you want to share it or go back and see some of it. We have a Telegram channel and some WhatsApp groups where we do post the direct access links to future webinars, and that's a service we have. I'm going to request Abhishek ji to give us some data or some points, which I can also post there, and maybe his contact information if anybody in the audience would like to, take up my offer of going and trying to do some of these writs or PILs. But quite frankly, if you actually need help with your with your particular case, and I hope you all found this a little bit interesting. Honestly, we could go on for another 3 hours and we would even scratch the surface. There's so many important points about GST, the actual impact it has on the ground, both how it has really benefited the country. I mean, and and apologize because we didn't really spend so much time on that, but truly, this is a marvelous change from what it was earlier. Uh, we've covered a lot of the issues that were pending, but these were compromises and political decisions that had to be made in order to get it done. And so it's better done than not done. Obviously, a very long way to go. And I just want to thank Abhishek ji for sparing his time. I know it's been a crazy day for you. It's been a crazy week, apart from all the professional engagement, personal life, everything. And deeply grateful for being here. And thank you all for the audience for sticking with us, even though we went a little bit forward. And I welcome you to all join our future series of webinar. Thank you so much.
Thank you so much, Aditya.